This is your technical update from the LMAX Exchange Research and Analytics Desk for Wednesday, December 9th, 2015. Euro dollar. So the euro has been well capped into recent rallies up towards 110 with the 38.2 fib retracement off of the August high to recent December low move, capping gains in favor of this latest pullback. However, setbacks have been very well supported on dips below 108, and so now we have a market confined to a range trade between 108 and 110. At this point, these are the key levels to watch above and below, 110 above and 108 below, with a close on either side to open the door for the next directional move. A close above 110 would open the door for a move towards the 50% retracement off of that August high to December low move, which comes in around the 111 area, while back below the 108 would open the door for a resumption of declines back towards the recent low from last week, down around the 105 area that came in at 105.21, below which exposes that critical March base at 104.60 further down. Sterling dollar. So cable continues to put in a series of lower tops and lower lows off that 2015 high at 159.30, with a fresh lower top now potentially in the works at 51.59 ahead of the next downside extension, which will be confirmed on a break below the recent low at 48.95, and this will expose a move lower towards that 2015 base at 145.66 further down. At this point, though, only back above 153.36, that previous lower top, would compromise the integrity of the current downtrend. Dollar yen. So dollar yen remains confined to a very tight consolidation over the past several days, with the consolidation being defined by 123.76 above and 122.23 below. A break on either end will be now required for clear directional insight, with a move back above 23.76 to expose a retest of the 2015 multi-year high at 125.85, while a break below 122.23 would open the door for an acceleration of declines, suggesting that we could be seeing a medium-term lower top ahead of a more significant resumption of declines back down towards the 119, 120 area initially, and potentially all the way back down towards the August base just shy of 116. Euro Swiss. So not much going on with Euro Swiss as this market continues to chop around, trading sideways and confined to a consolidation over the past several months. Overall, though, the recovery outlook remains intact off those record lows from earlier this year, and so setbacks are expected to be continue to be supported above 107.14 in favor of an eventual upside extension back above recent highs at 110.50. At this point, only close back below 107.14 would compromise this constructive outlook for Euro Swiss. Aussie dollar. So Aussie is back under pressure following another rally up towards 74 that has stalled out, and the market clearly is locked within a broader downtrend and looking for a resumption of declines back down towards the recent multi-year base, just shy of 69 from back in August. At this point, only a close above 73.85 would really compromise the integrity of the immediate downside pressure in this market. Dollar CAD. So dollar CAD continues to surge with the market trading to fresh 11-year highs after taking out the previous 11-year peak from September at 134.57. Daily studies are starting to look a little bit stretched though at current levels, and so additional upside over the short term should be limited with the potential for some form of a corrective pullback. At the same time, the bullish trend remains firmly intact, and any setback should be very well supported into the 130 area ahead of a fresh upside extension, eventually potentially now towards the 140 area, ultimately only back below the 128.32 low that we saw all the way back on the 15th of October would compromise the bullish structure. Kiwi dollar. So Kiwi has been confined to a bearish consolidation over the past several weeks, although the market is also confined within a broader downtrend, and so any rally should continue to be very well capped in favor of fresh declines down towards those recent lows that we saw, those multi-year lows from the 62 area from back in August. At this point, only back above the 69 area would compromise the integrity of the downtrend. SPX 500. So the S&P 500 continues to show signs of potential topping off after stalling out ahead of the May record high from 2137, stalling out at 2117 back in November, and the market now is poised for potentially an acceleration of declines if it can take out the recent lows that we saw on the 16th of November at 2003. Inability to do so, followed by a break back above 2117, however, would open the door for a retest and break above those record highs from May at 2137. Gold. So gold is in the process of attempting to put in some form of a bounce after trading down to fresh multi-year lows at 1046. A daily close below 1046 would open the door and expose those critical psychological barriers at 1000 further down, while inability to do so will keep the market thinking about a more significant bounce back above key barriers at 1100. A break above 1100 would be required now to take the immediate pressure off the downside and suggest that this base that we're seeing right now is a more significant base, which could have some legs opening a more significant bottom over the medium to longer term.